Okay, so in this video, we're going to be looking at the sell side of things. We're going to be looking at a perspective of a store owner giving out discounts after discounts after discounts. It's almost like gauging momentum, but it's putting a better spin on it where it gets you not to just understand, oh, the rubber band man, how far is he running? How far is he pulling back? How far is he running? How far is he pulling back? This is basically upping your game to understand how trading actually works. Because when you think about trading, right? What is the big boys' job? Are they actually trading the markets? To turn a profit between this price and that price? No, they're not. They don't really care for that stuff. That's speculation. That's what people like us. That's what we do. We want to pull money out of the market. What they generally do is, you're a buyer, I'm a seller. They want to give you the most expensive price, and they want to give me the worst price. That's what it is, right? So, um, they turn a profit by giving us and fulfilling our orders. Their job is to sell to us, just like our job is to buy from them, right? Where are we going to get our orders from? It comes in from the banks and the big boys. So their job is to, well, people want to buy, well, fill their orders. People want to sell, okay, fill their orders. So if their job is to just fill our orders in, so they're making money off of this supply and demand concept. Just seeing, oh well, if people keep buying, okay, raise the prices, raise the prices. If people stop buying, okay, lower the prices. Okay, just imagine, take a moment and imagine. Now, you guys came in through the MPA course, right? So the MPA course, you guys probably paid anywhere between $200 and $500, for example. Okay, depending on when you joined. But from the payment that you've made for the MPA course, what if suddenly I said the price is now, you know, 199? Is that much different from a 200 price range if you came in from there? What's that going to create in you? Is that going to create desire to buy it? Now, the lower I keep lowering the price, it used to be 200, now it's 199. Okay, 150. Okay, 100. Okay, $20. The lower the price comes, the higher the demand kicks in. Okay? The higher the demand kicks in, the quicker the demand kicks in. But it's working strategically to not, if the demand comes in at $20, is not to just keep it at $20 because, you want to play that game of supply and demand, right? So I'm just giving an example of something that you've been recently involved with, such as the mastering price action. So bringing back your product into the picture, let's say we're going back with the smartphone. So we're going to say the smartphone, the store owner starts to sell it like hotcakes, okay? Which means start to discount it like hotcakes, which means he has a lot of it left, but no one seems to be buying it. If no one's buying it and he keeps getting rid of it, what happens here? Some people try to buy it, okay? But followed by that, aggressive buying right here. Followed by that is like, okay, discount, slow discount, slow discount, slow discount, slow discount. Do you think the market's clear for a lower low at this area? No. It's not going to easily make lower lows after that area. The seller is testing the market, trying to see, well, do I need to collapse my price even more, or are people willing to buy? Because people were willing to buy here. Okay? So around this area, some buyers are starting to come in. Once again, an aggressive discount, and then buyers kick back in. They're like, okay, I want it. Again, around this price, we start to see a struggle of the buyers saying, still, man, price is still too expensive. Now, all this action is happening in the same area where this action happened last time. Now, I want you to stop focusing on precision. Is it exactly this price? Is it exactly that price? Stop that. Stop focusing on such precision and start to understand the logic. Why are we having some reactions at this price? Is because, think about it, in your own mind, right? Think about it in your own mind. If that phone was $1,000, for example, from $1,000, it became discounted to $500, and then after $500, it became $5,000. You're gonna remember that day. What's gonna happen is the moment the further price moves away from an area, you will remember that price and be like, Oh man, I remember last time when prices came down to, $500, it took off really, really high. This gets buyers going. This gets buyers going. Okay? Now, this shows you clues of how many people are willing to buy. There are people there out of, fear. Oh shit, if I don't buy it now, then it's gone. I need to buy it. So they buy it. But you're starting to see the resemblance of, doesn't look like the store owner is happy, is it? He still starts giving aggressive discounts. Aggressive discounts means no buyers, no buyers. Market keeps coming lower and lower and lower and lower and lower. Stabilizes here a bit. Aggressive buyers come back in. Not many. There's a battle where the seller's like, maybe I don't need to give discounts anymore. The buyers will come back. Come back, come back. Some more aggressive buying comes in, followed by a halt, which means this high was never breached. Okay? They tried to raise prices up here, comes down. Tried to raise prices up here, comes down. Tries to raise prices up here, discount again. Prices get up a little bit higher, exhausted, discount again. Okay? That's the concept of probes, right? A probe is basically, it's the last attempt of any last people who are willing to buy it. If it doesn't take off and it collapses back inside, that means no one wants it. No one wants it. Okay? Then it goes down for a aggressive sell functionality again. Okay? Comes down to here. Some aggressive buyers come in. Discount again. Some slow buyers come in. Little discount buyers come in again. Little discount. Now notice this phase is doing this concept. It's like, oh man, looks like the buyers don't want this. This might go for another sell. But at this point, the phase changes a bit. There is a buyers and sellers struggle here. Now, for all of us watching this thing, we're like, it doesn't make any sense. I thought this was going to be a sell because it's showing signs that the big boy and the store owner just wants to give discounts after discounts after discounts, and less people are willing to buy it at a higher price compared to before, right? That's how a downtrend line is drawn. But this thing gets accompanied by, remember last time when prices were here, when it was discounted, everyone bought it like hotcakes. Remember that day? That remembrance comes back. It comes back. And our job is to see what happens in this remembrance area. Okay, not jump in. It's what happens in this remembrance area. That's the problem with supply and demand traders. They just jump in. They're like, okay, well, that's it. No, you got to understand what's going on. Not only just that, you want to put the whole context into play. How aggressive was the discounts? Are the discounts slowing down? Or are they still aggressive? Yeah, they're still aggressive. Okay, let's see how people are starting to buy from here. Does the buyers come back? Whoa, look at that aggressive discount again. But now this time, buyers gobble it up. Like, whoa, what is going on here? The buyers are willing to take the discounts at a worse and worse and worse price. Okay? They're willing to take discounts at a less and less of a discount, and they're taking it higher high, taking it higher high. This gives us signs of what's going on. Could this be the end of the seller revolution, where the buyers no longer, the store owner no longer needs to give a discount? Could that be it? Okay? This is what we call the V formation concept, right? Like, is that the V formation right there? Okay, is that the turnaround in the market? Okay, same thing happened here, right? Is this the V formation? Okay, but with the V formation, you also have to understand is, well, where's the higher lows that were rising up here? Nowhere. So that V formation accompanied by a massive downtrend, it's like, I don't know about that V formation, man. This one looks a little bit more promising, but not that one, because that one still says, I don't think no one wants to buy it anymore, because it comes from this story of everyone got rid of it. So is this V formation real or fake? Could it be just bouncing because of this? So anyone who's strictly a supply and demand trader who activates the buy is in for a treat. That's like, oh man, that's a loss. That didn't work out. Okay? But down here, it starts to react, but then they don't know if they need to hold on or not. Because every time it goes up and comes back down, goes up and comes back, they're like, I guess I need to get rid of it. Okay? But if you use these logics to your advantage, you start to get an upper hand on, actually, what is going on here? What is going on here? So let's continue reading this market. Okay, so the buyers keep coming in at a higher and higher rate. They don't need so much of a discount anymore because business is good again. The psychology from this past moment kicked in. Okay, watching the markets go up and up again. Just like we have buyers, you know, the buyers use the same psychology. Remember this price? The sellers also have the same psychology. Okay, remember when prices got to here, a big discount happened? Well, maybe we're going to get the big discount again. Remember this price right here when prices went up and then a big discount happened? Maybe we're going to get a big discount again. So why keep buying it at a higher rate? Right? So the same concept happens for these guys too. It's the aggression of how much of a discount happened is what gets embedded in the memory. Okay? The human mind remembers those moments because they're all about deals, right? They're all about catching opportunities. That's how the human brain works. Opportunity, opportunity, opportunity. Okay? Where is my chance? Okay? So when they think of that, well, why would they keep buying if they know last time it gave a massive discount at that price? So maybe you just wait. That prices will drop again, right? All right. So it comes back into this area. You're seeing buyers come in, buyers come in. Now, speed, healthy. Every step of the way. Speed is healthy. Every time the seller gives a discount, the buyer gobbles it up. Seller gives a discount. Sorry, my mouse is acting weird. Let me clean up my mouse a bit. 1 second. This Apple mouse makes this. Okay. Every time a seller gives a discount, buyer gobbles it up. Seller gives a discount, buyer gobbles it up. Gobbles, 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 gobbles. Discount, gobbles, gobbles. Slow, slow, slow. Discount, gobble. No one. Discount again. Gobble. No one. Crash. Do you see the churn phase happening here? From a buyer that starts to slow down to the V formation to the test to the drop. Now do you start to understand why the technical language is the way I've given it? What's a V formation? What's a slowdown of the rubber band man? It all revolves around this concept of, can you understand how prices play a role in the market? Can you watch this with an open eye while still keeping your minds open about this guy and that guy and saying, I wonder what people are thinking at this stage when they're buying this phone for a more and more expensive price. I wonder what the store owner is doing with it. Okay, when you start to read the market like this, you have the upper hand in identifying what's my big boy doing. Okay, just by simply drawing lines like that or like that is not going to get you anywhere. It's not going to get you anywhere. You need to read the market to its absolute best. This way you understand what your big boy is actually doing, as if it's one individual, right? Okay, so treat it like that. It's one individual. What would you do with him? Would you buy? Would you sell? What would you do? You know, look at this. Aggressive selling here. Aggressive, aggressive, aggressive. Same price again. Gobbles it up. Now, this is the price that came in from last time as well. Okay? It's like, oh, that guy again. I thought in supply and demand, if we use an area once, then it's weaker, right? No. You need to understand the story. What's going on? Why? Is it going to stop here? We don't know that. We don't know that. We have to start to look at traits and be like, well, what's he going to do from here on out? This is how you play it safe. Otherwise, it's all aggressive and it's just a coin toss and saying, come on, risk to reward, probability game. But if you read it, you eliminate your chances of losses. Okay? Or you decrease them dramatically. Okay, so massive, massive discounts here. Discount, 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 gobble up. Some discount, gobble up. Now look at the speed and distance the gobbling is going. It's like, ah, they're gobbling it up at less of a discount every step of the way. Well, what does that mean? It's a higher high sequence, right? Higher high sequence. Now, over here, doesn't it look like, well, isn't that a running man slowing down, and then that's a V formation, that's done, that's a full rest? He should collapse. No. Remember this, you got to keep an eye on the story of the gobble up. So this is going to give you that little advantage of, is it supposed to drop, or what's it supposed to do? Well, one thing is, this is an important key price. Okay? And if you're starting to understand the logic of when this gobble up happens, you're like, oh, look at this. Overall, they're also accepting less discount. This is the overall behavior. This is the immediate, sorry, let me move this. This is the immediate behavior. You're like, okay, I'm starting to see a pattern here. But still, I can see how strong this came down versus how strong it's going up. They're gobbling it up. Prices drop again, gobbling it up. Remember that price when I got a discount. Remember that price when everyone bought it last time. Maybe they'll buy it again. Remember that price when there was a huge sale during Christmas. Maybe this Christmas as well is going to be a sale. So people line up. Right? Now this time around, when the prices come back down, there's your little V formation right there. But look at how aggressive it gets gobbled up. Right there, that little piece there. It's like, is this guy still alive? Could these buyers be still willing to take a buy? Okay? And if so, well, how far can my prices go? Can I actually cross this? Okay? So I want you to start practicing these concepts and the stories. We're going to go into the technicals, why, how, and all that stuff a little bit later on. But I want you to first take this week to just cement this as hard as you can and learn to read the market for what it's doing and use a product that you know. Be familiar with the market in the language that you can understand. Okay? And I'll see you guys next week, and we'll go into this even deeper. Cheers.